Good morning, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is January 18th, 2023. Just had retail sales and producer price data come out of the U.S. It was weaker than expectations for both of them. That is leading to a lower dollar. We're seeing stock prices move marginally higher. The NASDAQ is on a 7-day win streak here today. Yields are moving lower with the 10-year down now around 11 basis points, getting weaker as I speak. So let's take a look at some of the major technical levels that are in play for some of the major currency pairs. The euro versus US dollar has seen a sharp rise to the upside in trading here today in the European session, helped by a movement higher in the pound versus US dollar. The dollar yen also moved sharply lower as a result of the Bank of Japan not doing any policy changes at their meeting, which was expected. Overall dollar selling. We did see the euro move back down into the in late London morning session, and that took the price back below the 100-hour moving average. That move to the downside was helped by the technicals in that the price could not get above these swing highs right through here. Moved up to the upper end of that range at 1.08736 and rotated back to the downside. As you can see, after the PPI, after the retail sales, we are seeing the price move back up to these swing highs in between the 1.0866 and 1.08736. Get above those levels and it opens up the door for further selling. If we continue to lean against that ceiling, can keep the lid on it, and there could be traders that lean against that because risk can be defined and risk can be limited against these old highs right here. If the price goes up, just get out. But if the sellers lean against that, we could see a rotation back down toward the 100-hour moving average over time. We will see, but obviously the buyers are trying to make a play here in the euro versus US dollar. Taking a look at the daily chart, where do we stand in relation to some of the technical levels there? And we are above this swing area here. This goes all the way back to March, where we had March, April, May, and June, where the price came either used this level as a floor, this area as a floor, or use it as a ceiling before rotating to the downside to our low price that we saw in September. Since September low, we've seen a pretty steady rise to the upside, and over the last 5-6 or so days, the price has been able to get above this yellow area and hold support within that yellow area on corrective moves. But the ceiling in place here at somewhat of a random level. We will see if the market can break above that level, and then we start to look toward the 1.0940 level. That level corresponds with these swing highs through here and also swing low right here. We use this level as a support here, about going back to, I guess, March, and then in April we move below that level and then farm this ceiling here with 1, 2, 3, 4 different swing highs. It all came right around the 109.40 level, so that would be our next key target on the top side to get to and through if the euro versus US dollar is going higher. So that's a look at that currency pair. Let's take a look at the dollar yen. I mentioned that the Bank of Japan declined to change anything at their meeting overnight, and that led to a sharp rise in the dollar yen, a weakening of the yen. That moved to the upside on the daily chart, moved up to back into a swing area through here. And the swing area, if you go back in time, look at these swing highs here, and then broke above that level and use a level as a support right here for moving higher. And this day right here, we did move below that swing level, but found support against the key 100-day moving average and then reestablished support here and moved to the upside on the trading downside in the month of December. We had one day where the market fell below that level, rotated back to, well, actually 2 days, because the last day of the month fell below the level as well. And in January, we traded above and below that level, but we tried to find support against the level here and move higher, but it didn't. And in the last 5 or so days, we saw these sharp move to the downside. That in anticipation of the Bank of Japan decision, that was not to be, and we started rotating back into that area in trading here today, but found sellers again. And as you can see, this move to the upside, you see where the price is right now, way back to the downside. We retrace the entire move to the upside in trading here today. This is what it looks like on the hourly chart, up and down. So a big lap was made in the dollar versus yen, and in the process we have moved back below the 100-hour moving average. We tried to hold support here and move back higher, but we couldn't, and we just rotated to the downside off the PPI and PPI data and the retail sales data. What levels are important on the top side now is to get back above the 100-hour moving average, and then I also earmarked this level right here as a key level. You can see why that level near the 129.497 level, let's call it 129.50, was a key level. We had to swing low, and then became a ceiling high right through here, broke through it with momentum, but failed, and then rotated back to the downside, and we started to use that area and the 38.2% retracement of this move as resistance. So 100-hour moving average, stay below is more bearish. If we move above that level, we still need to get above the 129.50 level in order to push the price higher in this currency pair. If it doesn't do that, sellers are, I give the bias more to the selling side. Seems like the market traders are taking control here and going to force the Bank of Japan into doing something down the road. Maybe not this month, but they're going to they seem to want to keep the pressure on the dollar versus yen, keep the upward pressure on the yen, and force them to deal with the potential for higher inflation in that country. So watch that level. On the downside, we have the low price that was reached just 2 days ago at 127.21 as the next key target. On the downside, off the daily chart, where does that take us? Or where are we looking toward? Look toward the 126.55 level on more momentum to the downside. I'll change this to the weekly chart. And the 50% retracement is of this whole move from the this goes all the way back to 2020. This is the March pandemic low to the high that we saw last year, and the 50% of that whole move comes in around the 126.55 level. The 126.35 level is the low price that we saw right here before the next move to the upside here. So somewhere around this area right here is going to be another key target on the downside for the dollar versus yen, given more selling pressure in that currency pair. Finally, let's take a look at the sterling versus US dollar to complete the report here today. And we're seeing rotation to the upside. The CPI inflation continues to remain high in the UK, 10.5%, something like that, year on year. Maybe it's 10.3. Anyway, it's above 10% for the CPI year on year, and that is continuing to keep the pressure to the upside for the pound versus US dollar, at least in the short term here, and in the long term, I guess. We move back above the 50% retracement of the move down. I'll put it on the, I'll squeeze it out here. This comes down from the high price that we saw in the what is this, June 1, 2021. So June 1, 2021 high down to the low that we saw in price in September. We're moving above the 50% of that move at 123.60. This swing area also through here is a key area that we're trading back above, and that is going to be our support level for this currency pair going forward. If the price can remain above this area right through here, that would be more bullish here for the pound versus US dollar. On the top side, we have the 124.46 level, which was the high price that we saw in the month of December as our next key target. On the top side, we got close to it in trading here today, but fell a little bit short. Move above that level, and we'll look toward this swing area on the daily chart through here, where we have, again, a number of different swing highs forming a ceiling right here. Haven't really been back to that level since June of 2022. So get above the 124.45 level, and we look toward the 126.50 or 126 level to 126.65 level as the next key target on the top side for that currency pair. Let's just take a quick look at the hourly chart to see what that is telling us, and you can see that the low price here today, based against an old a swing area here on the hourly chart, goes back in time. Just follow the yellow area. You can see the different support and resistance levels there, and we moved above it in trading yesterday. We did move above it on Monday, but failed. So we traded above it yesterday, and we stayed above it. And in trading here today on the dip in the Asian session, we bounced off it as well. So there you have it, a pretty detailed look at three of the major currency pairs here to start your trading day, to get you going, to understand what key levels are in play. If you like this report, give it a thumbs up. If you didn't like it, give it a thumbs down. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.